afternoon, everyone, and welcome to Stock Market Today. It's Coram and Justin Nielsen here with a look at the action in today's session, Thursday, July 6th. And today we did see stocks drop on hotter than expected data out there, but on the economic front, but we did see a recovery off lows. What do you have for us today, Justin?
Yeah, we'll discuss the fact that it did come up off the lows. That was important, I think. But also, there was some strength out there, some stocks that were holding up pretty nicely. And so we'll talk about Microsoft, Adobe, and HubSpot, all of
All
them
right.
trading tightly.
Trio of software stocks there. We'll get to that. But first, let's take a look at the major indexes, starting with a look at the NASDAQ. As you can see on the chart here, down 0.8% by the end of the day. Same for the S&P 500. The Dow down 1.1%, and small caps taking another hard hit today, down about 1.8% by sessions close. But as we said, we did see a bit of a recovery off of those lows. So it's not like we were just falling apart into the end of the session, Justin. We did get a little support.
Yeah. So if you look at kind of the intraday chart, you saw that most of the damage was done at the beginning of the day. It kind of hovered around the lows for a while, but instead of grinding lower, which I was almost expecting it to do based on the first couple hours of trade, it really saw a recovery kind of midday and came up well off its lows. So that's the good news. But again, if you kind of look at the big picture here, looking at the daily chart, we did fill in the gap from Friday, so that really strong day that we had to end the quarter. All those gains kind of disappeared quickly, but it's not too bad, right? We're still within a week's worth of progress. But one of the things that you have to be aware of is what was holding up the indexes. I mean, you have if you look at the Qs, for instance, because the Qs are just taking the Nasdaq 100, which is the top non-financial stocks, and this kind of shows, okay, of those 100 stocks, Microsoft, Apple, Meta, those all contribute about 30% of the index, and all of those were, I mean, Microsoft and Apple were up. Meta was flat. It was up for a good portion of the day.
Mhm.
So that was kind of giving some sense of index hiding, I guess, where it's not showing
Right.
as much damage. Because if you look at QQEW, that was definitely hit a lot harder than QQQ. And QQEW, of course, is the equal weighted Qs. So it kind of takes away some of the effect of those large mega cap companies that sometimes can hide the action of the majority of stocks.
Mhm. And on the NASDAQ composite, if you look at the performance that we saw in May and June, I think we were all impressed by how short lived the pullback
Right.
was. So maybe we just need a little bit more time to digest those big gains. I mean, the first half of the year, historic performance, right, for the major indexes.
Absolutely, absolutely. And if you think about it, kind of look at a weekly chart here just to kind of get that big term perspective. That level of 14,000, it's just really kind of pausing right there. And that level of 14,000, if you go back to 2021, there were a few quarters there where that 14,000 level was an area of resistance. So I don't think that there's really anything to worry about here. What
Mhm.
ideally I would like to see happen is that we just kind of build a platform here from which we can launch another rally.
Exactly. Let's quickly take a look at the other major indexes. We have a scorecard webinar to get to.
Yeah.
The S&P holding above 4,400 and its 10-day line as it finds support. Let's also take a look at the Dow and the Russell. Here's DIA. So down today, but off its lows, still holding above the 50-day line. And just in small caps, we've been seeing with bigger moves in both directions. So same story here today, but it did recover off of those lows too, like the other indices out there.
Yeah, but certainly it's looking a lot worse than the other indexes, whereas especially the Nasdaq Composite and S&P 500, you look at those and it's really kind of holding up a lot of tight action. Basically, 6 days of a powerful rally in the Russell 2000 was just wiped away in just 2 days, and so that's not a good sign. Part of that is some of the some of the action behind the banks pulling this down. There's a lot of banks in the Russell 2000, especially those regional banks, and that has been pulling things down. Keep in mind that ADP report. Look, that had an effect on the Treasury yields. So 10-year Treasury yield, looking at zero
Yeah. Wow.
TNX in MarketSmith, really jumping up there, almost to the highest levels that we've. I mean, go ahead and look at the weekly chart, and you can kind of see that the 10-year yield is getting right up there to those highs that we saw in 2022. Clearing that 4% level, and the shorter term, even like the 2-year and such, that's increasing a lot. So those chances of a Fed hike increasing, those wishful thinking of a cut happening later in the year disappearing quickly.
Yeah, exactly. And we were keeping tabs on the action here with a trend line from the highs saying, all right, are we going to break out of this level? And sure enough, we did.
Yeah.
So we'll continue to keep tabs on that. Quickly looking at ITB here, home construction, which has been one of the leading groups, taking an outsized hit today.
Yeah, I mean that's just possibly an effect of the increase in the treasury yield. It's they usually have an opposite correlation there. What's been impressive was how well the home construction area, ITB, being one sample of that, how well it's been doing despite the higher interest rates. But it's certainly not surprising to see it kind of come in a little bit today. But still, overall, a very impressive move, and I don't know that we can necessarily count this out.
And let's take a look at IGV as well, which tracks the software sector. We're going to take a look at 3 software sector names here. Down 1% today and some support at the 21-day line. So great to see that support there. We'll see
Yeah,
if it can
and
hold.
IGV is, if you look at the top 10 holdings and the weights there, Microsoft and Adobe, both of which we're going to look at today, are big components there. And there's a number of if you go down the top 10 holdings, there's a lot of these stocks that are holding up well, acting tightly. Or one of the big components is Palo Alto, PANW. It's like what pullback? It just keeps on going up. So there's a lot of strength there in that IGV. And so that's one of the reasons why I chose that as a place to look today.
And I mean, Justin, even if we do get a little bit of a shakeout below the low from 626, this still could pick itself back up and move on to greater heights. Doesn't necessarily have to stop at that 21-day. So,
Yeah, yeah, very, very easily. And again, what happens a lot of times as you get this digestion of gains is that it lets the 50-day moving average line catch up a little bit. And you've got to expect that for those investors, and this includes, institutional investors that may have missed out on a lot of this rally, didn't believe it, didn't see the signs, were too afraid of recession. This might be an opportunity that they're looking at for a pullback to pick up some more shares and get more heavily invested.
let's take a look at Microsoft MSFT up almost 1% today and talk about support around the 21-day line. The stock has been able to do just that.
Yeah, and if you kind of shift to the weekly chart, what's really kind of interesting here is it's right up there at those November 2021 highs, and so it's just kind of pausing right here. And again, I like the idea of it kind of building a platform from which you can launch from. The fact that it was up on a day where most stocks were getting hit is really impressive. And this is one, if you go to the monthly chart, to really get that big long-term perspective. Look, this is one that had 16 years of nothing happening after it peaked in 2000. This is one that reinvented itself, as opposed to being, hey, we've got our Windows operating system. It became about cloud computing, and now arguably AI is perhaps another chapter in the story of Microsoft. And that's something that we talked about on the podcast this week with Joe Fahmy. So Microsoft was something he talked about quite a bit. So definitely worth a watch there.
Yes, check it out, investors.com/podcast. Another software stock that is getting fueled by this AI theme is Adobe, ADBE. look how nice and tight this stock has gotten in some really quiet volume too, after an explosive move in the lead up to earnings and after earnings as well, right around that time, seeing a lot of volume and money flowing into this stock, with that AI, story being what's fueling the stock here.
Yeah, I like what you pointed out there, Allie, because I absolutely agree. The volume coming in on the upside was so powerful, and the tight action, it's really, you can kind of see this as a wait and see approach. There's just not a lot of selling happening here, even as the market was pulling back. So that's certainly a positive. And this was our stock of the day today. So Patrick Seitz, who does a lot of our technology coverage, he did a deep dive on what generative AI means for Adobe. Again, this is a company that really reinvented itself when
Hmm.
they went to the subscription, the subscription as a service kind of model back in, what was that, 2012 or something around there. So generative AI is something that can be very big in their creative suite, and the question remains about how to monetize it, but certainly people are looking at that as having an impact.
Yes. And so maybe if it can get above this tight area or trade sideways a little bit longer, let the 21-day line catch up, a bounce off of that level seems like a potential entry here.
Absolutely. And it's no secret that round numbers often make a psychological difference, and you can't get rounder than 500.
Too true. And last but not least, let's take a look at HubSpot. Look at this upside reversal today, finishing in positive territory after a bit of a shakeout below the 21-day line, touching its own round number of 500 here, Justin.
Yeah, and so here again, we're right at one of those round numbers, and a lot of the computer software enterprise stocks have a very similar look. They've pulled back to their 21-day moving average lines, but HubSpot, we were talking about this on IBD Live today, where HubSpot looks a little bit different from the others because it's had a lot more time above its 50-day moving average line, a lot more time above its 200-day line. That's roughly equivalent to the 10-week line and the 40-week line if you're looking at a weekly chart. So it looks a little bit different. It's had a more powerful move here in the April to May area and through June, and this tight area that it's just been kind of doing over the last month is ideal action to
Mhm.
me. So it's just really letting that 10-week moving average line catch up to it as it's
Right.
paused. So another potential platform that's building here with some potential for some bigger moves.
Yes. All right. Well, we'll keep these three stocks on our radar. Thanks so much, Justin. And thanks everyone for tuning in. If you are a swing trader subscriber or trialist, make sure you check out our scorecard webinar happening today in less than 15 minutes from now. If you go to swingtrader.investors.com, that is where you can get the join link. We will see you there, everyone. And we'll also see you right back here tomorrow at the close.